So let me welcome you, ladies and gentlemen. I am Trevor Heaven, the board chairman for Future Energy Source Company Limited, our company acronym of FESCO, and I will be moderating the proceedings for this, our general meeting. And so on behalf of the board of directors, I am happy to welcome you to this, our FESCO's 2023 annual general meeting of our shareholders, which for us is an extra special occasion as the company continues to celebrate our 10th anniversary, having started with just 900 Jamaican dollars. And now, after 10 years, we can boast over 9,000 members and a book value of equity in excess of $1 billion Jamaican dollars. FESCO is the fourth largest transport fuel marketer in Jamaica and the largest local marketer by volume, and that is by liters of fuel sold as at March 2023. Our company is also the first fuel entity listed on the Jamaica Stock Exchange. Our company markets fuel derivatives such as bitumen and or asphalt, fuel equipment and technologies. We do have proprietary lubricants, proprietary chemicals, and proprietary bottled water. Okay, so it's a growing network of dealers, dealer-owned, dealer-operated stations. We sell directly to customers at its company-owned, company-operated service station, FESCO Beachwood. We service industrial customers and also commercial customers who may also require heavy fuel oil and kerosene as well. FESCO has grown from 3 branded locations in 2014 and to now, after 10 years, to 18 locations as at March 2023. During that time, the company as growing from being a new entrant into the land fuels business with a market share of 0 to now having a share of an estimated at 8.3%, and that was at December 2022. And this is the share of transportation fuels, which are E1087, E1090, automotive diesel, and ultra-low sulfur diesel. And so to those in person here at the summit and online via the JCSD e-AGM platform, it is truly a privilege and a pleasure to be with you all this afternoon. So, ladies and gentlemen, at this point, I would like to introduce our company secretary, Mrs. Keola Muirhead, and ask that she confirm that the required quorum of 2 members present in person, which include members online or by proxy, has been met. Mrs. Miriam?
Yes, Chairman.
I will now call our meeting to order and invite one of our founding directors, Mr. Errol McGaw, to open our proceedings in prayer. Errol?
Thank you, Chairman. Ladies and gentlemen, good afternoon. Mine is a pleasant duty to say prayers. And with that in mind, I would like to ask you all present to kindly rise. And as we're about to pray, I'd like us to reflect on Proverbs 16, verse 3, which says, "Commit to the Lord whatever we do, and your plans will succeed." In our hearts, we plan our course, but the Lord determines our steps. And so, Heavenly Father, God of all creation, we lift our souls in humble adoration and praise to you. We know that every good and perfect gift comes from you. We therefore ask that you sanctify our efforts, making them fruitful, not just in a material sense, but in spiritual growth. Father, we ask for your gracious guidance as we strive to build and grow this company of ours. In a world where unethical practices are often rewarded, we ask that you grant us wisdom and courage to uphold your standards, to showcase your principles of integrity, of service, and of excellence. O Lord, we put our faith and our trust in your hands, that you will bless FESCO, bless our suppliers, our customers, our employees, and our shareholders. We pray for the protection of this enterprise and for the investments that we have put into it. May this journey be fruitful and successful and generous to all and to our investors today and always. And may this, our second annual general meeting, be filled with your spirit and conducted in a manner that is pleasing to you. Father, bless Jamaica, land we love. In your name we pray. Amen.
Thank you. Thank you so much, Director McGaw. Ladies and gentlemen, the audited financial report and annual report inclusive of the financial statements and reports of the directors and the auditors for the year ended March 31st, 2023 were earlier circulated to all members. And so I now take pleasure to introduce Mr. Wayne Strawn of the firm Baker Tilly, the company's auditors. And it's again a pleasure to invite Mr. Strawn to read the independent auditor's report, which begins, and I refer you to the annual report, page 51. So, Mr. Strawn.
Thank you, Chairman. Good afternoon, everyone. I'm here to read the auditor's report. My name is Wayne Strawn. I'm the engagement partner. Please bear with me, it's a bit lengthy, but I have to go through this process word by word. Independent auditor's report to the members of Future Energy Source Company Limited. Report on the audit of the financial statements. our opinion. In our opinion, the financial statements give a true and fair view of the financial position of Future Energy Source Company Limited as at 31st March 2023, and of the financial performance and the cash flows for the year then ended in accordance with International Financial Reporting Standards, IFRS, and comply with the requirements of the Jamaican Companies Act. What we have audited. Future Energy Source Company Limited financial statements comprise the statement of financial position as at 31st March 2023, the statement of comprehensive income for the year then ended, the statement of changes in equity for the year then ended, the statement of cash flows for the year then ended, the notes to the financial statements, which includes a summary of significant accounting policies. Basis for opinion. We conducted our audit in accordance with International Standards on Auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statement section of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the company in accordance with International Ethics Standard Board for Accountants Code of Ethics for Professional Accountant, IESBA Code. We have fulfilled our other ethical responsibilities in accordance with the IESBA Code. Audit scope. As part of designing our audit, we determine materiality and assess the risk of material misstatements in the financial statements. In particular, we considered where management made subjective judgments, for example, in respect of significant accounting estimates that involve making assumptions and considering future events that may inherently uncertain. As in all our audits, we also address the risk of management override in internal controls, including, among other matters, consideration of whether there are evidence that's of bias that represented a risk of material misstatements due to fraud. How we tailored our company audit scope. We tailored the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the financial statements as a whole, taking into account the structure of the company, the accounting processes and controls, and the industry in which the company operates. Report on the audit of the financial statements. Key audit matters. Key audit matters are those matters that in our professional judgment were of most significance in our audit of the financial statements for the current period. These matters were addressed in the context of our audit of the financial statements as a whole and informing our opinion thereon, and we do not provide a separate opinion on those matters. And I have the key audit matters here. My first key audit matter is the expected credit loss. IFRS 9 financial instruments is a complex and requires the company to recognize expected credit losses, ECL, on financial assets. The determination of ECL is highly subjective and requires management to make significant judgment and estimates, particularly regarding significant increase in credit risk and forward-looking information. The identification of significant increases in the credit risk is a key area of judgment, as the criteria determine whether a 12-month or a lifetime allowance is recorded. IFRS 9 requires the company to incorporate forward-looking information that reflects a range of possibly future economic conditions in measuring expected credit losses. Significant management judgment is used in determining the economic scenario. the probability weighting, and management overlay. We have determined that the estimates of impairments in respect of trade receivables have a high degree of estimation uncertainty. And it says, see note 3A of the financial statements. So these are how the audit address these key audit matters. We perform the following procedures: obtain an understanding of the model used by management for the calculation of the expected credit loss on receivables. We tested the completeness and accuracy of the data used in the model to the underlying accounting records on a sample basis. We involve our financial risk modeling specialists to evaluate the appropriateness of the company's impairment methodologies, including the criteria used for determining significant increase in credit risk, and independently assess the assumptions and compliance with the new requirements of IFRS 9 financial instruments. We involve our financial risk modeling specialists to evaluate the appropriateness of the economic parameters, including the use of forward-looking information. We tested the company's recording and the aging of trade receivables, assessed the adequacy of the disclosure of key assumptions and judgment, as well as the compliance with IFRS 9. Based on the audit procedures performed, no adjustments to the financial statements were deemed necessary. The next key audit matter relates to borrowings. We refer to note 12 and 15 of the financial statements for the management disclosures and related accounting policies, judgment, and estimates relating to borrowings. As at the 31st March 2023, long and short-term borrowings, excluding long-term lease liabilities, represented $2 billion. And when compared to the previous year, it was $1.2 billion, or 60.69%, or in the previous year, it was 62.21% of the total equity and debt of the company. The company continues to be highly leveraged. How the matter was addressed in our audit. The company remained highly leveraged as management continues to strategically use debt financing as a principal pillar to implement structures growth projects within the company. During the year, management implemented strategies to improve its gross margin, thereby improving its cash flows and its ability to meet financial obligations as they fall due. The company continues to examine its financial options within the context of its debt management strategies and review its choices based on the present improving market conditions as well as its risk profile. Our audit procedures include reviewed the loan agreements and repayment schedule. We noted that all the loans were being serviced in a timely manner as per contractual agreement, principally by predetermined monthly deductions and the company's various bank accounts. We confirmed the balances, reviewed the maturity schedule of repayment. We tested the interest calculation and determined that the total borrowing represented obligations by the company. We tested the effectiveness of controls over the timely repayment of loans and other credit facilities and noted that they are compliant with the various agreements. We had robust discussions with senior management regarding the growth and expansion strategy, including debt as principal means of growth and expansion, and the ultimate strategy to reduce debt capital over the long term. A downside to this strategy is the inherent liquidity risk, and cash generating unit acquired may not perform as expected, resulting in the companies being unable to meet its obligation as they fall due. Management is mindful of its inherent liquidity risk. However, management is confident that their strategic growth and expansion plan will continue to perform based on historical performance and anticipated future positive trends due to encourage economic factors being experienced in the marketplace. Management is of the opinion that adequate safeguards are in place as they have implemented the necessary policies and procedures, including scenario analysis, alternative payment strategies in the event of cash flow challenges, and direct monitoring of the individual borrowings. We evaluated the performance of the borrowing portfolio subsequent to the end of the financial period to determine whether there was a need for any adjustment or whether there were any default or breach in any term of the financial covenants. There were no adverse findings. We also reviewed legal and bank confirmation and correspondences, and we did not identify any negative matters or need for adjustment at the time of approval and signing of the auditor's report by the board of directors. Other information. Management is responsible for the other information. The other information comprises the annual report, but does not include the financial statements and auditor's report thereon, which is expected to be made available to us after the date of this auditor's report. Our opinion on the financial statement does not cover other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the financial statements or our knowledge obtained in the report or otherwise appear to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matters to those charged with governance. Responsibilities of management and those charged with governance of the financial statements. Management is responsible for the preparation of the financial statements that give a true and fair view in accordance with IFRS and with the requirements of the Jamaican Companies Act, and for such internal controls as management determines is necessary to enable the preparation of financial statements that are free from material misstatements, whether due to fraud or error. In preparing the financial statements, management is responsible for assessing the company's ability to continue as a going concern, disclosing as applicable matters relating to going concern and using the going concern basis of accounting unless management either intends to liquidate the company or to cease operation or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the company's financial reporting process. Auditors' responsibilities for the audit of financial statements. Our objectives are to obtain reasonable assurance whether the financial statements as a whole are free from material misstatements, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but it's not a guarantee that an audit conducted in accordance with the ISAs will always detect a material misstatements when it exists. Misstatements can arise from fraud or error and are considered material if individually or in aggregate, they could reasonably be expected to influence the economic decisions of users taken on the basis of these financial statements. As part of an audit in accordance with the ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risk of material misstatements of financial statements, whether due to fraud or error, designed and performed audit procedures responsive to those risks, and obtained audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omission, misrepresentation, or the override of internal controls. We also obtain an understanding of internal controls relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the company's internal control. We also evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. We also conclude on the appropriateness of management's use of the going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists relating to events or conditions that may cast significant doubt on the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosure of the financial statements, or if such a disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of the auditor's report. However, future events or conditions may cause the company to cease to continue as a going concern. We also evaluate the overall presentation, structure, and content of the financial statements, including the disclosure and whether the financial statements represent the underlying transactions and events in a manner that achieves fair presentation. We also obtain sufficient appropriate audit evidence regarding the financial information of the entities or business activities within the company to express an opinion on the financial statements. We are responsible for the direction, supervision, and performance of the audit. We remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, among other matters, the planned scope, timing, and audit of the audit and significant audit findings, including any significant deficiencies in internal control that we identify during our audit. We also provide those charged with governance with a statement that we have complied with the relevant ethical requirements regarding independence, and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence and, where appropriate, related safeguards. From the matters communicated with those charged with governance, we determined those matters that were of most significance in the audit of the financial statements of the current period and are therefore the key audit matters. We describe those matters in our auditor's report unless law or regulation precludes public disclosure about the matters, or when, in extremely rare circumstances, we determine that a matter would not be communicated in our report because adverse consequences of doing so would reasonably be expected to outweigh the public interest benefit of such communication. Report on other legal and regulatory requirements. As required by the Jamaican Companies Act, we have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purpose of our audit. In our opinion, proper accounting records have been kept so far as it appears from the examination of those records, and the underlying financial statements are in agreement therewith, give the information required by the Jamaican Companies Act in the manner so required. The engagement partner on the audit resulted in this independent auditor's report is Wayne Strawn. Signed, Baker Tilly, Chartered Accountants, Kingston, Jamaica, 29th of June, 2023. Thank you, Chair.
Thank you. Thank you so much, Mr. Strawn. The notice convening the meeting to be found on page 2 of the annual report has been circulated to members, and I now move that the notice be taken as read. May I have a seconder? Seconded by Belinda, Director Belinda Williams. I now wish to inform you that the proxies to be exercised at the meeting must now have been lodged with the company, and at least 48 hours before this general meeting. We have received 3 proxies representing 1.75% of the issued stock of the company. I also take the opportunity to remind you that our articles of incorporation are available for viewing on our website, and I recommend you to www.fescoja.com. I want to welcome all those who have joined us since we started. It's really good to see you, and I'm happy that you're here with us. Online, we have, at last check, approximately 78 persons joining us for this, our annual general meeting. Let me now move to item 5 on our agenda by introduction and apologies. I'd like to introduce the directors. The first 4 directors I will mention are, in this meeting, retiring by rotation and are offering themselves for re-election. Firstly, Mr. Harry Campbell. Mr. Harry Campbell is the Chief Technology Officer of Cornerstone Trust and Merchant Bank, CTMB, with responsibility for providing innovative and strategic guidance to the bank. Cornerstone United Holdings Jamaica Limited and Barita Investments as well, Limited as well. And he's been working on key business development initiatives that provide growth for the financial companies. He is also a technology and automation consultant with West Indies Petroleum, WIP, and served as a director of information management to the Accountant General's Department. Secondly, Ms. Gloria Declue serves as chair of FESCO's Corporate Governance Committee. She is an attorney at law, having been admitted to the bar in Trinidad, in Dominica, in Guyana, and of course, Jamaica. She's managing director of Blenman, Declue and Company, and has a wealth of experience in civil law, wealth of experience in criminal law, commercial law, banking law, public law, entertainment law, and conveyancing. Mrs. Blenman is also the legal advisor to the All Island Jamaica Cane Farmers Association and all legal matters with special focus on employment law and on labor law. Thirdly, Mr. Vernon James. Mr. James serves as chair of FESCO's Human Resources and Remuneration Committee, and of course, the Executive Committee. He leads the fully digital startup, TFOP 2021 Limited, which manages the first digital financial services link. As Chief Executive Officer of TFOB 2021 Limited, Mr. James taps into his vast and strong innovative leadership experience, garnered over decades in the banking and insurance industries. Mr. James holds a Master of Science degree in Financial Mathematics from the Warwick University in England and a bachelor's degree in mathematics from the University of the West Indies. Mr. James acquired expertise in portfolio management and development at NCB Insurance Company, which he led for 8 years. Prior to joining the NCB Group in 2008, he managed investments, he managed securities trading at Scotia Investments Jamaica Limited. Mr. James also serves as director on the NCB Foundation Board. And last, but by no means least, directors requiring and offering themselves for re-election is Mrs. Belinda Williams, with over 28 years of commercial banking experience, honed at National Commercial Bank. Mrs. Belinda Williams served as appointed manager in several leadership positions, the last being responsible for strategic direction, corporate bank, with responsibilities for strategic development, with responsibility to manage the reputation, image, and goodwill of the two brands through various stakeholder relationships, aided by the execution of key strategic business initiatives. She was promoted in 2019 to head of marketing and communications of the Proven Management Limited, with oversight responsibilities for the companies that the business has acquired. The rest of the 11 members of our board include Mr. Ethan Parkins, who now serves as the lead independent director of the board and the audit committee chair. Mr. Trevor Barnes, a founding director, Mr. Hugh Core, a founding director, Mr. Aaron McGaw, Mr. Junior Williams, both founding directors as well, and of course, our hardworking Jeremy Barnes, who serves as managing director and CEO. Not to leave out, of course, our very good friend and colleague, Lisa Mitchell, who is a key advisor to the board as its mentor. Shareholders, I would like to acknowledge the staff of our company, members of the leadership team, which includes Mr. Omar Morgan, who's been with us from the outset as operations, security, and information technology. Andre Royce, marketing and business development. Rowena Nelson, our accounting manager. Miss Annette Lewis, human resources. Miss Karen Jones, administration. Mr. Khalil Stevenson, who is General Manager of FESCO, Mr. Kareem Gordon, Marketing and Logistics, and of course, Mr. Stefan Linshu, who is Engineering, Operations, and Safety. It is now time to welcome to our Managing Director for his presentation on the management discussion and analysis. Pleasure to welcome to the podium our Managing Director and CEO, Sir Jeremy Burns. Can you give him a round of applause, please?
Thank you very much for that introduction, Chair. Good afternoon, everybody. Everybody excited about this AGM? All right, I want to thank everybody for coming, those members here in person and those online. It's my responsibility to now go through the director's report and management discussion and analysis. Do we have it on screen? FESCO's vision is to be the most customer-centric, dealer-centric, and community-centric fuel distribution company in Jamaica. This was our goal from the outset, our vision from the outset, and it remains our vision today. So we want to be the leader in fuel distribution. We want to be Jamaica's most customer-centric, dealer-centric, and customer and community-centric fuel distributor marketing company, providing customers with a superior experience when value and convenience matters. Our mission is to improve the experience of our customers by enabling convenient, seamless access to our goods and services, enhance the communities in which we operate, which is very important to us, and provide above average returns to our shareholders by a measure of return on invested capital. How we do this? We observe the highest standards of integrity, safety, productivity in the conduct of our business. We utilize the best technology available. We enhance customer value and customer experience in any way we can. We pursue feverishly and engender profitable and fair relationships between our customers, dealers, staff, and suppliers. And in doing so, we try to foster, develop, and support the Jamaican economy through a program of local investment and reinvestment and charitable initiatives and employment enhancement. Our products are fuel related. Our initial products are fuel related. We have integrated our business somewhat, and fuel products include 87, 88 at some of our stations, 90, 93, both diesels, ADO and ultra low, bitumen, asphalt, kerosene. And in addition to that, we do sell fuel equipment that includes tanks, pumps, anything gasoline related. We do distribute our own brand of lubricants and chemicals through our Future Oil and Future Lube brands. And we also distribute our own brand of purified drinking water, which is FYC. We're extremely proud in just 2 years, since our listing in April 2021, to introduce a blend fluid to the market, which is Eten 88. We're the first and only marketing company, gas station, that offers blended or has them blended dispensers at our pumps. We're the first and only service station to utilize balanced vapor recovery at the dispenser. We have improved the availability and accessibility and convenience of getting 93 octane, which is a fuel that many in the premium end of the market needed for a long time in a convenient way, that they can just drive up to a pump under a canopy, unaffected by rain, and be able to get the right octane fuel for their high performance vehicles. And we're very proud of being the first service station network to offer the general public to participate in our benefits as a shareholder. We're really, really proud of that. In that short 2-year span, we've been able to grow our net profit from 108 million to this year to $571 million. That's over 428% growth within 2 years of being listed on the junior market. During that time, we've increased our staff complement from 7 full-time employees to 82 as at 82 as at March, and we're about 95 now as at September. We've been able to increase our service station footprint in the year ended March 2023 by 4. So at the end of March 2023, which is the report we're going through, we're at 18 service stations. Today I can tell you we're at 20 service stations. By the end of October, we'll be at 21. We're very, very proud of the growth that we've made in the last 2 years. And again, we really want to thank the public for your patronage and support. It's really been a pleasure to serve you in this way. And during that time, and as I remember I said before, that we have a program of investment and reinvestment in Jamaica. During that 2-year period, we've been able to invest over $2.5 billion back into the Jamaican economy by pushing our gas station brand and developing our LPG line FESCO. During that time, as I think our chairman alluded to, just over 10 years ago, we had 0% market share. We've been able to reach 8.3% in a market of over 450 service stations, with just about 20 service stations being able to garner 8% of the market. We're really, really proud of that. We're really proud of the support and thankful for the support the public has given us in that regard. Performance snapshot. What have we done? Last year alone, and again, if you look at all our reports, we don't really talk about turnover, we talk about gross profits, because turnover is more a function of what the price of gas is, and we have no control over the price of oil and those commodities. But last year alone, we were able to generate $887 million in gross profits, which is up almost $500 million over the previous year. Our net profit again, similarly, is up to $571 million, which is up $317 million just a year prior. And as alluded to earlier, or stated earlier by our chairman, a $900 investment, Jamaican dollars, not US dollars, a $900 Jamaican investment, or a book value of $900, has now mushroomed into $1.3 billion as at March 2023. All that while being able to, in the previous year, able to grow our network through Dodo, our dealer-owned, dealer-operated stations at Whitehall, St. Elizabeth, and Ocho Rios. And again, we want to thank our new dealers that come along, our existing dealers, and all our industrial customers that have supported us throughout the year. And we're really, really proud of being able to bring products that the people want and make them convenient. In particular, for the year ending March 2023, what we have been able to accomplish, yes, we've been able to accomplish over $500 million in profit, net profit, almost $600 million, which we have exceeded our IPO forecast. So we're one of the companies that actually, in our IPO, tell you where we want it to go. We gave you a 5-year outlook, and we've been able to exceed that forecast that we made. In fact, for the year ended March 2023, we exceeded our own projections by $209 million. Thank you. At that time, we hoped to have earned $362 million, and I said before, we earned $571 million. We successfully opened 2 stations within the year, and we've been able to renovate and refresh the aesthetics of most of our stations throughout the network. We continue to invest in our LPG strategy and our service station network expansion. Interested in our business to add a station from a new station, which is a greenfield project. It takes approximately 3 to 4 years. So there's a lot of planning that is involved to roll out stations. It's a long process from finding the location, finding the dealer or the dealer contacting us through the various approvals required, construction and commissioning of the station. So, I can't comment on deals to come, but we do have a bit of stations and developments in the pipeline. And, through our quarter reports, we report, when those transactions or those deals have been concluded. But it takes time. So I know at FESCO, what we always do is working on 3 different timelines. Working in the present, that's where everything is happening, but we always have looking 3-4 years out. And again, you just in the whole planning of a station, we can't even design a station to what a station wants to be today. We design a station 5 years, 3, 4, 5 years ahead, because that's when the station will open. So there's no point in designing a station for what we think is today, but we have to project what we actually believe a station or what the customers will want in 3 to 5 years when we're designing and building a station. And evidence of that $2.5 billion investment over the tenure of the company, last year alone, we spent over $1.63 billion on infrastructure of our FESCO and our gasoline-related businesses. And something else we've been very proud of, we've been able to extend our hand to sponsor and donate to various civic groups, individuals in the areas of education, sports, entertainment, and health. We did make a big focus on entertainment because we know coming out of COVID, those industries were heavily affected, and we really wanted to get nightlife started back in Jamaica. So we invested or sponsored events with that aim and that goal in mind to reach an industry that was, really devastated, due to COVID. So as I say, at the end of March, we're at 18 stations. By the end of next month, we should be at 21. The only parishes we're not in currently are Portland and St. Thomas. And hopefully, in the near future, in the coming years, we'll be able to extend our dealership network to those parishes. What does FESCO look like now or versus what it looks like at the end of March 2023? And this is a subsequent event to our annual report. But as at March, when the year ended, we did not trade or sell 1 liter of cooking gas. Subsequent to that, we're now in the cooking gas business. So that's a major change in our business. In addition to that, we have gotten a lot closer to the customer. So before, the only way we were touching the customers in the final user of the product was at our Beachwood service station. We now operate a second service station in Spanish Town, Kitson Town. We're very pleased with the performance at that station so far. And again, it's really you, the public, that have come out and supported us. So I've really integrated the business to include touching the customer, what we call B2C transactions. In addition to that, as I said, we're in the LPG space, we're operating a filling plant, and we're also distributing, and we're also selling to the end user customer. So, as you can see in the annual report, which is highlighted, that the structure of our company has changed since the year end. And this will be reflected, as you can see, in the earnings, gross profits, and expense nature, or the nature of expenses that we have. So you'll find that you'll find that expenses such as bank charges, because we're going to do a lot more transactions with individuals, so credit card charges will go up. You'll find that insurance costs going to go up because we have expanded our asset base by 1.6 billion. I know insurance rates are approximately 1 to 1.3% of assets. So our insurance expenses will go up. But as evidenced by our Q1 earnings, as you can see, we have it under control. In fact, our Q1 ended June 2023 was our best quarter ever. And last year we said at our annual general meeting we're in a growth mode. And yes, we're still in a growth mode. And I just wanted to point out that our expense profile has changed subsequent to our operational changes. All right, next. Right, next slide. So our market share estimation For the month of March 2022, we estimated that we had 7.94%. And for the March the previous year, we estimated that we had about 4.4%. But for the calendar year, when you sum the calendar year for ending December 2022, we're at 8.3%. So for that year alone, that calendar year, we're selling in excess of 101 million liters of fuel, a number which we're very, very proud of. In fact, in March of this year, the last year of the period, we're able to sell in excess of 10 million liters, and we're really, really proud of these achievements. If when you're scrolling and you're looking at the 8-year performance chart, some key numbers to look at is you can look at our audited net profit from 2016, which was $12 million. So from 2016 to 2023, we've been able to grow that 12 million in profit per year to 571 million. Again, this is really a testament to the staff, the directors, the stations, the customers. I mean, it's not me. It's you guys buy our fuel. You guys are the real champions out there. So I really want to thank you, and we're really proud of, and grateful for all the support you have given us. If you look at return on equity, which is part of why we do this business, is to get returns. And as I said, it's one of the key ratios we look at, including return on invested capital. You can see that for the last year, our return on equity is 55%. I think that's remarkable in this time. I think, again, we have done a lot of stuff to contain costs while we grow. We've programmed our growth over the years. Again, the only way you can do this, again, is by planning years in advance. And just working towards a plan and then being nimble. You see, being a company of 7 employees 2 years ago, our advantage or our strategic thing is just try to be nimble. And that's one key attribute I don't want this company to lose, is being able to be nimble. So even when we do program and plan for 3-5 years in advance, we do try to take advantage of today's activities or today's opportunities. So if you look at the ROE over the period, if you look at the book value of equity moving from, as I said, $900 back 10 years ago, or $14 million in 2026 to over $1.3 billion is really a testament to the growth of the company. In addition to that, I gave in the report, or if you can see it on screen, which is the next slide, what did we project versus what did we do last year? So in the IPO, we said that we wanted to be at around $62 million in net profit. We achieved 571. And last year we did 253. So it was over 125% growth over last year. And compared to where we wanted to be, we're about 58% higher than where we wanted to be. Revenues and turnover. Again, it's not a number we key on because it's not, a big portion of that, or a big component of that calculation is the price of gas, which we don't have no control over. But as you can see over the period, we have grown from last year, $12.6 billion in turnover revenue to about $26 billion in turnover. Just key to note, again, we itemize this in the report to look at what Petrojam's ex-refinery prices were for both last year and for this year. As you can see, there are periods in time when the price was higher this year than it was last year, but at the end of the year, the price was significantly lower than what it was last year. So what this says when you analyze the number is that we're growing in liters fuel. And that's how we really measure. We don't measure it in dollars, we measure it in actual liters of fuel sold. Gross profits. Again, it's a number we're really, really proud of. Again, our integration efforts in trying to get closer to the customer with the B2C model. Our gross profits have expanded from 389 million to 887 million. And I believe for the first quarter ending June, our gross profits for the quarter alone was $330 million. So what you're seeing is an expansion of gross profits because we're kind of getting closer to the customer, or we're doing more efforts to get close to the customer, along with the expansion of our business and expansion of our dealership network. operating expenses. Along with everything else, operating expenses will grow. If you're a bigger company, you have more staff, you have more assets to manage, assets to repair, assets to insure. But relative to gross profits, you can see that our expenses are relatively stable. It's about 36, 35%. It was that for the previous year. It's that for this year, ending March. So within all of that growth, we're growing efficiently. And as I said, we try to program our expenses to ensure that we don't incur expenses too early in our growth trajectory. So again, it's a testament, or it's an achievement to actually achieve 36% an expense ratio. I must point out to everybody that going forward, again, the nature of our expenses have changed and have switched. You will see that there is a significant increase in, let's say, salaries. We move from 7 to 82. So there must be a concomitant increase in salaries. And, our labor force, I believe that is one of the best out there. I'm proud and really I'm proud of, the team that we have. Yesterday, and this is no exaggeration, I have a friend of mine and she's a shareholder. She probably joined in online because I don't see her here. She typically texts me whenever she has an issue at a gas station, at a FESCO station. And she texted me the day before yesterday and I never read it. Because I said, boy, I hope it's not an issue. And I wanted to sleep, I was tired. And I said, you know what, let me just read it next morning. And when I read it the next morning, she was there telling me and congratulating us on the service she got from an attendant at Beechwood Avenue. And I must look and call and talk to the supervisor because that person was excellent. Again, when I talk about our employees and I was talking about our managers, I'm talking about our janitors, I'm talking about our bearers, I'm talking about our pump attendants. They're excellent people. And we're really proud of them and we're happy that they have embraced the brand and embraced the company the way they have. And I want again to point out to them, I know they're not listening, and if they are listening, I really want to tell them thank you for all that you have done to build the brand FESCO. All right. It's kind of hard to see this one, but it's there in the document. So if you can see it, not on screen, but in paper or on your tablets at home, you'll see what I was talking about regarding the expenses. Though they have increased in many cases over 100%, relative to gross profits, they are relatively flat. So it's proportional growth, proportional to our growth in revenues, growth in profit. And lastly, what is the outlook beyond? I know that's what a lot of people want to hear about. The truth be told, I'd love to tell you a lot more, but I have to hold some stuff close to our chest because our competitors are in our meetings. And it's not wise for you, the shareholders, for me to tell our competitors what we're going to do. But suffice it to say, we're happy that we've brought in we're happy and proud to start in the cooking gas business. We have some technology that we have introduced, which is a no-blevy cylinder. What that means is you can light it off. I'm not telling you to try. Again, I'm not telling you to try. But we can provide video evidence that if you light 100 of them filled with gas, there is no explosion. So it's a safer gas, a safer cylinder for your gas. I'm really proud of that. We will continue to open additional service stations. Again, we just opened Kidsontown, we just opened Maypen, and we're really thankful for the support we've gotten. We're about to open Port Maria in about a month. And again, we want to thank that dealer, the whole team that's doing that whole development, from contractors right down to the security guard. We're really, really proud of that station. I think it's going to be a destination in Port Maria. It is the most beautiful station on that side of the island. I really want you guys, if you're traveling that side of the island, to stop. I think when it opens, it will be amazing. So we're going to be doing more of that. We're going to be having additional stations. We're going to expand into the LPG space, trying to get more our products more accessible to the product. We just started that business just about 5 months, 4 to 5 months old, and we'll be expanding in that area. And in addition to that, as I said, we want to further innovate. We've been a company that innovates. We look outwards and try to apply some of the stuff that we see happening around the world to Jamaica, because we believe Jamaicans deserve better and deserve more. We're always going to diversify our operations, and we always look for opportunities to integrate. And there will be some announcements. It's too early to put them out now, but between now and December, we'll be making some key announcements. And again, I just want to thank everybody for coming. And that is your management discussion and analysis.
Jeremy, I want to thank you for that very detailed and succinct report. Of course, we're moving into questions and answers now, but just want to make a comment that has been illustrated by Jeremy's presentation, that the most important resource in our company is our people, our staff. And we cannot underestimate the value that they bring to us. And he spoke from the janitor right back to the board itself that has come together as a group. And of course, most important partner that we have clearly would be our customers, the customers who make us who we are, and we are eternally grateful for the partnership. So then I'm at the point, colleague shareholders, the question and answer. Are there any questions? I'll be happy to take them. Is there a microphone? Or is there a microphone right here? If you want to move to the microphone so we can hear you, and all of us can hear what you're saying, the question. Would you like to move up to the microphone, or are you? Yeah. You can make, yeah.
Mr. Chair, good afternoon to you, sir, and to your members, board members. And we must give God thanks for bringing us safely to this meeting today.
Amen, my brother.
Without his assistance, we would not have been able to make it. So we give God thanks for the tremendous effort that you, your board members, and the employees have put in to this FESCO. Jeremy has done a tremendous job, and he has gotten the assistance of people who have been experienced in this business. And he has really listened and really inputted into this business a lot of the information that he has gotten. Mr. Chair, the company is a new company. And I'm glad to see that Jeremy has been able to override some of the challenges that people are talking about. It's not easy. This business is not an easy business to operate. Very difficult. But you have people like yourself, Mr. Chair, people like Mr. Errol McGaw, Mr. Allen, Mr. Junior Williams, Mr. Barnes, experienced people in this business, Mr. Kaur. And this experience is being inputted into this business. Mr. Chair, if you turn me to page 5, the company continues to be highly leveraged. What do you mean by that?
Being highly leveraged?
That just means that we use debt to finance our expansion. We had 2 bond raises, one for 1 billion and one for 700 million last year.
Mr. Chair, in 2022, the total revenue, all the revenue generated by FESCO was $12.6 billion, $12.6 billion. And that $12.6 billion cost $12.4 billion, which gave you a net profit of $253,640,444, which means that out of every dollar of revenue generated in 2022, 98 cents went to expenses and 2 cents went to profit. 2 cents went to profit. In 2023, Mr. Chair, your total revenue, and when I say total, I mean all the revenues,
Everything.
was $26 billion, $26 billion. And that $26 billion cost $25.7 billion. For every dollar generated in 2023, 98 cents went to expenses, and 2 cents went to profit. Incrementally, that is, those revenues that were generated over and above what was generated the year before was $13.6 billion. And that $13.6 billion cost $13.3 billion. So your total revenue generated versus your expenses for generation of that revenue has remained stable. I would like to see something being done with regard to the expenses so that our profit can show a little bit better than what it has shown over the years.
So what you're saying, our growth has remained flat through the years.
Yes.
Right.
Yes.
You need to balance that now with what we've been doing in terms of our expansion, and our capex and the growth, in not only our land fuels operations in terms of stations, but also in terms of innovation, taking on a brand new challenge through our additional income generating operations. So it's you need to really balance that with it's good to do that we have not gone down, we've stayed flat. But at the end of the day, balance that now with what we've been doing in terms of growing. So what you'll find is that as the year passes and the new investments that we have put ourselves into matures, you're going to see a significant growth in those numbers.
Okay.
All right.
Jeremy, you want to add anything?
Right. In addition to that, you see, I think part of what your analysis was saying that when you look at the total turnover relative to the profit, but you have to remember, if you look at the gross profit, so if you look at just the cost of goods sold, that comprises almost 96% of our turnover. And that's why I said we don't look at the price of gas because we're reselling gas to the public. And I know you're not suggesting that we raise our prices to the public for selling the gas. So it's more a relative number to look at gross profit relative to our expenses rather than look at turnover. Because turnover has the cost of gas in it. And as I said, the cost of gas alone is over 95% of all the money we take in. So they take in $1, 95% goes back to the refinery and to the government for taxes. We operate in that gap of at 4% of our turnover to make gross profit and to make profits.
Mr. Chair, if you turn me to page 44, the interest expense moved from $7.5 billion in 2022 to 17 million, from 7.468 million to 17.286. What are attributed to that? Page 44.
Oh, you mean interest expense? We have debt.
We're talking about the interest expense, yes.
Right,
Remember Jeremy spoke about some caps.
interest expense is a function of the level of debt we have. No,
What, 1.7 billion?
we have $1.7 billion worth of debt, so the interest expense went up. I know that a lot of the interest expense has been capitalized, and because we haven't started the business as yet. But the interest cost that we pay is a function of the level of debt we carry. No, or we do carry a mortgage on one of our properties, and that formed part of, and that business is operating, so that really formed a part of where that interest expense is.
Okay, I understand. On the same page, Mr. Chair, page 44, I noticed that the auditor's remuneration moved from 3.5 million in 2022 to 5.8 billion in 2023. Why?
Million.
Yeah.
Oh.
No, million.
I'm sure Wayne wish it was billion. The company has grown, both in scope and in size, and there was a adjustment in that audit charge, and we aggressively negotiated, but we believe it was reasonable, fair, and representative of a good audit. So I think the fee is fair.
Mr. Chair, I would like the CEO to look into this number because this is ridiculous. Ridiculous.
I take it. Mr. Staple, you wanna?
Yes.
We have a few persons online. We have some questions. We'd love to. What I want to do, if it's possible, colleagues here, is that we kind of rotate the questions. We take one from the floor, one from.
I have one more comment to make.
Yes, a comment or a question.
That
Congratulate your message.
That has to do with the LPG.
Yeah.
I think the move is a good move.
Thank you.
From the government bought the refinery in 1985. Nothing new has been done to LPG in that plant. I am sure with the experiences of Mr. McGaw, Mr. Barnes, Mr. Allen, Mr. Williams, Mr. Kaur, and yourself, I'm sure there's going to be some movement as far as demonstrating to the public, demonstrating to the government what you can do with new technology to make the consumer feel the impact of that by a reduction in their price. And I would like to see that being done because Mr. Heaven, consumers are feeling it. Consumers are feeling it.
We fully empathize.
And whatever can be done to assist the consumer. And I'm sure with the expertise that you have in your company, LPG can be made cheaper and can be sold to the consumer at a cheaper price than what it is being sold at now. And I would like for you, sir, to look into that carefully. As you said, as I said, you have the expertise around you. You have the Williams, the Allen, the Kaur,
Barnes,
McGaw, yourself, Mr. Barnes. And I'm sure all these expertise, these professional advice can assist in making Jeremy's job a little bit easier. Because I'm sure young Jeremy is not going to.
Not so young anymore.
Young Jeremy is being surrounded by the, I don't want to call them wolves, but by people with experience. And I'm sure they will want to share that experience with Jeremy so that the product that is made is going to be cheaper.
let me give you the assurance that the FESCO team, the FESCO family, is an awesome, awesome team. And with our customers, that's who we are. Thank you so much, Mr. Stable.
Thank you very much, Mr. Stable.
Yeah. All right. Thank you, Errol.
All right, we have a few questions online. One is, why does FESCO directors keep selling down the price? I have no evidence of directors trying to sell down the price. I think that everybody wants the price to go up. What I would say is, people, I'm not an advisor, talk to your advisor, but I think when prices are low, you buy. When will FESCO be coming to Montego Bay? We are in Montego Bay at Portobello. If you're talking more central in the city towards Iron Shore, I can't speak directly to anything like that right now. But we are at Portobello, and it's an excellent station. It's one of our earliest dealers, the Bacchus family, and wonderful family, wonderful people. They operate that station along with the Negril station. So if you're in that area, please patronize both. What's the next question? Oh, somebody's asking that when we promote events or in the entertainment space, if you can offer discounted tickets. I think we did so for Chris Brown's event. Actually, there was a discount on those tickets. So yes, it's something we aim for, and I will talk to the promoters and see if we can garner more discounts for you. Is there any other one? Or is there a forecast for paying dividends? It's a very interesting question. We have a lot of opportunities out there. And opportunities to seize them, you have to use the capital that you have. Now, when we're taking on projects or we're evaluating on those opportunities, again, we look to the return on invested capital. At this point in time, we have a lot of opportunities that we want to invest in. Given the nature of the market right now, where interest rates are where they are, given where asset prices are where they are, and because we're in a junior market and we only could raise about another $100 million in equity capital until the threshold is raised, and I think they're hoping to raise it from 500 million to 750. The most efficient way for us to access capital is to make profit, retain that profit, and invest. Dividends in that formula is a leakage. I think if you went by the proposed dividend policy, would have probably paid out about 140, 150 million in dividends. I can assure you that we have taken on projects for that 140, 150 million, which will generate returns and give you profits that are growing. So what does that mean? No, we don't propose that there's going to be any dividends for this year because we're growing. And you'll see that in the profit numbers, you'll see that in the expansion of the business. And again, if you went to the market to borrow at this point in time, interest rates are exceedingly high. So, I think it's a far more prudent move to wait, take advantage of the growth opportunities that we have. And then once there's a resumption of dividends, then you will see the impact of all of this investment. And the dividends, you get it in dividends. Because remember, when we paid the first dividends, 25% of our profit was just around 40 million. The growth that we've made, 25% of our profit is 150 million. So as we grow, your dividend payment will grow. So when we actually resume that dividend, paying a dividend, you'll be getting a bigger dividend in nominal terms.
Any questions from the floor at this point? You can take another question.
Any from the floor? Sorry. It's about 60 million, right? 60.
Pleasant good afternoon, Lancel Bloomfield, your shareholder. Mr. Chairman, 2 questions, 1 comment. Mr. Chairman, please accept commendation on your company's improvement in the growth of its revenue and by extension, profits earned from same. Congratulations.
Thank you, Mr. Bloomfield.
Mr. Chairman, do you have any data on the total size of the cooking gas industry and where the greatest demand is at present?
I think we do. Yeah.
Yes, we do. The market it ranges from about 13 million to about 17 million liters per month, depending on the month. December and Easter are the most have the highest LPG usage. What was the next question? Where is there demand?
Let me just repeat the question. Do you have any data on the total size of the cooking gas industry
Right.
and where the greatest demand is?
Demand was Kingston St. Andrew.
You can answer the second question in many parts, whether geographic or by customer type.
Yes.
If you're thinking about customer type, the retail markets that the research that we have and conducted is kind of proprietary. It's not data that's widely available, and we paid a lot for it. But suffice it to say, the total numbers give you some level of the size and scope, and that's ministry numbers which is available, and it ranges from about 12 million liters to about 17 million liters per month, and you can annualize that number.
All right, accepted.
Mm-hmm.
Mr. Chairman, the apartments, especially the newer apartments that are a part of the Strata Corporation, have been for some time now restricting the use of gas, LPG.
Right.
How do you plan to get around some of this? And what are the strategies to be able to introduce your safe cylinder into this space?
Well, I can't give you any strategies of how we plan to do it, but you've answered the question in stating the question.
Rhetorically, no?
No, you have said the product. You've answered the question.
But it's a good opportunity, though.
It's a good
That's something
opportunity,
that's passed us. So we've considered it many times.
You've answered the question in your question.
Yes. Excellent. But don't forget, there are some regulations, governing how things with high-rise buildings, for instance.
I do know,
You can
Mr.
appreciate
Chairman.
that.
That is why I'm putting it out there, because
Right.
I know that there is this restriction.
Yeah.
So I'm saying with the safe cylinder that you are now introducing into the market, it's the first I'm seeing a cylinder like that. So I'm saying, how do you plan? Do you plan to go to them, or you just leave it alone and look on the other markets, etc., etc.?
The opportunity hasn't passed us, and it's work in progress. Don't just say it's work in progress.
All right. And one final thing here. Are we going to get one of these cylinders to take off?
We'll take your number
Like your spirit.
and we'll be happy to, put you on our.
They talked to Belinda about that.
Thank you, Mr. Chair.
All right, online.
Online, yeah.
Question from Colin Wheeler. Any plans to move to the main market? Not at this time. There's value in the junior market for the tax benefits. They want to see us have more involvement in the construction sector. Do you have any future plans for this? We're not a contractor or, we're a developer of gas stations, so we continue to, that's how we participate in the construction sector, just as a developer of gas station.
Except to say, though, that we do supply fuel to construction sites.
True, and yes, and we do supply a lot of fuel. Yeah. Users of fuel use FESCO. Any plans to go regional in the Caribbean? Again, I think our chairman said we're not limited by our plans. However, there's still room for growth in Jamaica, and that's where our focus is. Oh, are we in the bunkerage business? No, we're not. Somebody was asking, are we in the bunkerage business? Oh, and a statement by Shelley Ann Parkinson. She says, I'm okay to wait in a few years for dividends. Right. So, yes, I guess. Oh, she said, let's not turn FESCO into a Ponzi scheme. It's not. It's nowhere like that. And what are the chances of getting dividends in 3 to 5 years? Yeah, yes. Yeah, it will be earlier than 5 years. And most likely earlier than 3 years.
Yeah, good afternoon. I'm Natasha, co-agent. Let's say I want to switch from IGL to your gas. How do I go about doing that?
I've made it so easy for you. Andre and Khalil are here in the room right now. They will get you to switch right now. They'll give you the numbers and they'll arrange the delivery today if you need the delivery. Andre or Khalil, can you just please identify yourselves?
So is the regulator
The
same,
regulators,
I have to change my regulator too?
you don't have to change anything.
Okay.
It works with all regulators in the market. So
Is it cheaper?
Yes.
cheaper in price or quality.
Price.
It's less expensive. That's the term we use, but you're getting an excellent product at
And a
excellent
better
value.
quality.
And the most beautiful cylinders I say in the market.
Yeah, that's true, but the price.
Yeah, man, you're getting an excellent price. Everybody gets an excellent price.
All right, let's talk.
Yes.
Any other questions? Okay.
Two things I want to ask you about. Two things I might not like to hear about.
Name? Just for
Benzene.
the
Oh,
ba-
Robert.
Robert.
Right. Benzene. What is the story on that? You have that under control? With the cooking gas. You know, there's a big thing in America now where they're banning cooking gas in certain places because of the benzene.
As a replacement for
No, they want to go with electric stoves instead of gas because of the benzene factor.
Some of these things that you see happening, they're more political than a commercial, economic, or safety issue. So wouldn't really comment on that. But suffice it to say, cooking with gas in Jamaica has proven to be very safe, cost-effective, and a better alternative than electric, and definitely for coal in Jamaica. So.
But you know, it's a health thing that comes off of the cooking gas that gets into your lungs. And
Again, our environment is ventilation is not a challenge.
right, ventilation
is not a challenge in our environment.
Right, that is the main thing.
Correct.
Right.
Correct.
If you have it properly ventilated, not a problem.
Correct. And most homes in Jamaica,
Yeah.
we have to open our windows. We don't
Yeah,
have
but there's
central air.
Some places are not ventilated and they're using cooking gas. And,
Right.
and the other one is, I think I should stay away from the
What's that?
cornerstone. I mean, I see they have a lot of investments with you guys, Barita. I mean, what's the issue? I mean, I shouldn't. All right, let me back out of that one then.
Our shareholder we have 9,000 shareholders.
Yeah, no, but they are the majority. They're
not the
ones. I
majority.
want to know if it's going to go might go the way of SSL or anything like that. I'm just curious. And I mean, as I said,
I would be
if I
curious.
don't have to ask the
You know what's
question-
curious to me?
yeah.
That all 3 million Jamaicans don't own shares in FESCO. That's more curious to me. But I would encourage, and I'm not a financial advisor, so speak to your financial advisor first. But I see no.
It won't affect your.
No, it doesn't.
None at all.
Similar, you owning shares don't affect us in any way, and we encourage anybody and everybody to become shareholders of FESCO. When you buy shares of FESCO, then buy some cooking gas from FESCO, and you get more dividends, and buy some gas from
buy the gas from
FESCO.
FESCO.
Correct. So we
But the-
encourage everybody, all Jamaicans.
Yeah, but the
go
only
there.
thing I'm not going all the way down to Beachwood Avenue.
No, man, we come.
No, I mean to buy the fuel. I know people
Sugar.
that do that. I know people that drive all the way from Ligani down to FESCO just to get gas when there's a Rubis or whatever.
Boy,
in Ligani.
and we're
I
really
mean, not doing
appreciate
it. I'm not doing that.
We
So
hope
you need to put a station in Ligani or Barbican.
We hope to. We hope
Yeah,
to.
do that
We
and
hope
I
to.
go there. But for now, I'm
Absolutely.
driving all the way down to Beach.
Well, anytime you go in country, just stop at any of our stations.
No, I
head
fill up
into
before
country.
I fill up in Ligani first
No,
before I
man.
go country. I don't go all the way to Beachwood Avenue to go fill up.
All right.
Look, we
So
have a
put-
very robust growth agenda, you know. So if there's
Right.
any property, anything
Right.
that you see that you figure is
Yeah.
workable, let us know. Let
All
us
right.
evaluate it.
And you'll buy it and set up the station.
Absolutely.
Right?
Yeah.
All right, I look out for you.
Absolutely. Yeah.
And you have a company secretary, I have to commend her.
Yeah.
Because she seems to be very efficient.
She is.
And I'm
very
sure
efficient.
she's a person.
Yes, she's very efficient.
She's the person that is making you guys look
Yep.
good. I'm
Yep.
sure in the
Always.
background. In the background.
Always.
All right,
always. Let me just say, colleagues, that, something, there's 5 of us started this company 10 years ago. And I keep, at every moment I get a chance, I boast that of the 5 of us, we have over 100 years of experience in this gasoline retail business. So rest assured that the experience, the knowledge, and the technology is here for us to go forward.
All right, good afternoon. Muriel Bailey, shareholder. All right, my first little peeve is that although you have, did you say 9,000 shareholders? Right, it's only about 20 of us in the room and they didn't have enough books for us all to be able to participate in this robust discussion. Yeah, I'll take it because I've borrowed somebody's one and it's kind of difficult to be kind of, and I don't want to mark it or anything, but Mr. Williams was good enough to lend me. All right, so my first, thank you. You can autograph it for me, Wayne? I'm just kidding. No, it's Wayne. I want to autograph it for me. All right, my first, what to call it now? I have a little confusion on page 38 of the annual report with the net profit. I think, I could be wrong, but I think the colors might be turned around, the red and the blue, like the 2023 is blue and the 2022 is red. But I think I was kind of trying to understand because certainly your profits have almost doubled, right?
More than double.
More than doubled. So I think the blue one isn't 23, I think it's 22. Page 38 in the annual report.
38.
And I must commend you with the annual report. I thought it was so well put together, the annual report. And one of the things I liked about it is that you told the age composition of the directors to show how young and how old and the percentage. And I thought that was a nice little flair in the report. It made it interesting to read. All right. You see what I'm talking about on page 38? It seems...
Yes.
Okay, so it's not
the
just
key.
me.
Right.
All right. The other thing now, the real concern now is on page 36 of the audited financial statements. Note number 9, trade and other receivables.
Right.
All right. So there we have other 2022, 79 million. 2023, we have 200 million. Would you be able to give us an idea of what's in other? But trade receivables, we understand the people you're doing business with, but other receivables moving from 79 million to 200 million. Are you able to give us, like maybe the major, what's in the other?
Mean from 79.8 million to 200 million. 200.8?
Yes.
That's the line?
Yes, and it's other.
Yeah, I think so, but I think it's a prepayment. Right, I believe it's some prepayments for assets that we've purchased, but we haven't received them yet.
But I see a line marked prepayments.
Prepayments.
We have trade receivables, we have prepayments, and then we have other.
Right, give it. All right. All right, online.
Well, Wayne, try to get the answer. Is there another question? Yeah, man.
Good afternoon, Jermaine McDonald from the media.
Right.
Question, you posted the market share. I think I've asked you this question before, Jeremy. Is there a target market share that you have?
100%.
Okay, so the next part to that question is, how do you see the market share growing maybe over the next 3 years? from 8% to
You know something, growth, the way I see growth, you can grow organically, step by step, or you can grow by acquisition. Now, I think I could speak for the rest of us to say that we are in both modes. Both organic, we continue our organic growth by building stations and look at innovations to increase our bottom line. But at the same time, acquisitions, if they come available to us, we certainly have to look at it. Which one of them? I don't believe that we have a true fix on a target for 3 or 5 years, but because that is contingent on opportunities that present themselves to us. Suffice to say, though, that we have some projects, some very ambitious projects coming up that you will see as time passes. I can't really declare now because Jeremy says our competitors are actually in the room. So we can't declare a number of the things we'd love to share with you. You know, but let's just trust us that we will continue the path of growth.
okay.
Jeremy, you want to add anything?
You said it all. That's it.
All right, so I'll ask a different question then. Is there, so the number of gas stations totally sits at 21?
21 in October, it will be 21, correct.
Okay, is that likely to be the same number by the end of this calendar year?
Calendar year, I mean
Yes.
December?
Yeah.
21 still.
Yeah.
Okay. All right, thank you.
Yeah.
I mean, what's else?
Yeah.
All right.
You're recommending St. Thomas? Yeah.
All right.
Thank you, sir.
Somebody online wants to know how they access FESCO. You can access our WhatsApp line. You can go to fesgasja.com and you can order your cooking gas. You know, just access the WhatsApp line and WhatsApp us and we'll deliver. Or you can check your nearest dealer, but if you definitely want to get to FESCO, it should be at your dealer and you can access our website and you'll see our WhatsApp line and you can just WhatsApp us and we'll deliver.
Do you have a toll-free number too?
Yes, we do. So you can access us at the toll-free number and or the WhatsApp line, and both are available at our website, fesgasja.com. Yeah.
Any other questions on the floor? We're still waiting on Wayne to respond to your question, Mrs.
By the way, the WhatsApp number is obviously 876-454-0925. That's 454-0925.
It's a staple. Sorry about that.
Can you go to the mic?
Yes.
One question I forget to ask.
Watch feedback.
Thank you, Mr. Chair. Mr. Chair, are we going to be dependent on the refinery for the supply of cooking gas to our business, or are we importing directly from offshore consumers?
Just wondering if that is also a proprietary answer we have to that question. Let me just say, though, that nothing has passed us. We're looking at every single option. Right? We're looking at every single option. Nothing has passed us. So if it's a question of looking at our own imports and so on, we're not closing the door on anything. So.
Mr. Chair, I would have liked to see your being able to do your own importation rather than to be dependent on a second-hand source for your importation.
I know you're going there, and I said where exactly going. But yes, as I say, it's not something that has passed us. We will definitely be looking at all options. As you know, right now in Jamaica, there are 3 importers. There is West Indies Petroleum, there is Petrojam, and I believe that Rubis does its own imports as well. So there are 3 such importers. Now, for us to get into that business of importing our own fuel, you look at additional infrastructure, which is a major capex for us to be able to, have the tankage that's required to take a full load of. We can't just order half a tanker of finished products. It has to be a full tank. And so we need the capacity to ensure they kept for storage. And with storage comes the whole question of the management of that storage in terms of the inventory control, the security of the stock that we carry, and of course what comes thereafter in terms of dispensing, loading, and transportation from there on. So it's not a simple import and you're good to go. There's a lot that goes on behind of that before we can get to that point. But as I say, it's not something that has missed us. It is something that we're actively pursuing. And we will get there in the right time.
Mr. Chair, my concern is that LPG plant and refinery has been there for time and over.
Yeah.
It has not changed.
Mhm.
And I am saying that if we are going into this business full time, I think we should think about our own importation.
On the LPG side? On the LPG side or gasoline? LPG, okay, I got you. Yeah. Yeah. In a similar way, we have to have major import. Again, for LPG imports, you have, the company has come together, Gaspro and IGL. They are now one entity. So, and they have facilities. So Master Gas, they import their own product over in Montego Bay. And locally in Kingston, it's really just Petrojam here. So, but it's something, as I say, the answer to your question is yes, we are looking at that as an option. Mhm. Any other question?
Yes, sorry. Hello? Somebody asked they would prefer to get the dividend payments, or they have an outstanding dividend payment. Right, she lives overseas and she'd prefer to get her dividends via transfer. Yes, that's possible.
In US dollars?
In fact, we have about approximately $1 million of uncollected dividends currently. So there are quite a few people who have not cashed their dividend checks. They might be still dated, but it doesn't matter. You can get them the date changed and refreshed, or you can arrange for us to change over to do a transfer. But there is about $1 million approximately of the 60 million we paid in dividends so far that is uncollected. If you go to our website and go to the investor section, you will see a section that says dividends and dividend information, and you see where you're going to sign up for online payments rather than getting a check. And truth be told, the transfer happens a lot faster, so I don't know why I would not opt for a check. It happens, you get it quicker, it's in your account. So, I encourage everybody to use that option. It's actually cheaper for the company because a check, you have to mail it, you have to print the check. And as I said, sometimes, as somebody said, if the check is for $100, it costs us $300 to send you $100 if it's a check.
Just to confirm also that our registrar is the JCSD, and therefore the form that you see on the website, you'll have to complete it and scan and email it to the registrar. And all that information is on our website under the investor section, dividend information.
Any other questions from the floor in the meantime? All right, we remain online.
Okay. That's it?
That's it?
That's it for the most part.
Wayne, any response to?
Yeah, we have that covered.
We're answering her
Okay.
on the floor.
Okay. All right.
Should we give us some?
All right, Jeremy, thank you so much. I appreciate, and colleagues here and online, thank you so much for your very good questions. That seeks to deep dive into our company and what we're doing. And I hope that the answers given are found to be satisfactory and that we will continue to support it as best as possible. Just one correction going forward with regard to the number of proxies lodged for this meeting. I just want to say that there are now 4 proxies representing 10.38% of the total issued shares of the company. Right? If I might move to resolutions as we seek to conclude our discussions. We there?
Sorry, to answer a previous question, the 200 million, it really is prepayments and prepayments offer. It's kind of 2 prepayments. One is more capital based, and one is, I think, is more trade related. But that the 200 million is on assets, gas station related assets, and our other assets that we have. Yeah.
All right, so we're good. We can go to resolutions. Any other questions? Just one last time. No? Okay, let's go to resolutions then. Colleague shareholders. I'm going to ask the directors that the directors report, which may be found on page 30 to 40 of the annual report, be taken as read. And I want to thank you for agreeing that we move forward with that. Members online may vote these resolutions by clicking vote now on the bottom of the screen, selecting the for or against option, and thirdly, selecting submit vote once you've chosen the for or against option at the bottom of the pop-up that comes right afterwards, and you'll be asked to confirm your vote. Of course, if you want to confirm, you select yes. If you are certain, you select no if you'd like to change that vote. And so resolution 1, order resolution 1. May I just ask your secretary, Mrs. Keola Muirhead, to read the first resolution.
That the audited accounts for the year ended March 31, 2023, and the reports of the directors and the auditors circulated with the notice convening the general meeting be and are hereby adopted.
Moved by Mr. Staple. You need a seconder? Seconded by Mr. Bloomfield. Thank you so much. Any abstentions? Any? Okay, I declare that the motion is carried. Deal? Okay. Do we all agree? Do we all agree? By show of hands? Yes? Ayes have it? Yes? Okay. All right. Unanimously adopted by the majority here. the ordinary resolution number 2.
In accordance with Article 102 of the Company's Articles of Incorporation, 1/3 of the directors, not including the managing director, Article 120, are retiring by rotation and being eligible offer themselves for re-election. They are
I would
Yes,
like
yes.
to move a resolution that we use and block all these.
So Staple, allow me to finish the resolution. Allow the secretary to just finish the resolution, please. I see where you're going. But just allow it for the formality of it and to ensure that we do and we are compliant. Let's just read the resolution in its entirety and then we can take the vote afterwards. Yeah.
continuing. They are Mr. Harry Campbell, Miss Gloria Declue, Mr. Vernon James, and Miss Belinda Williams. Reading Resolution 2A. That Mr. Harry Campbell, retired by rotation, be and is hereby re-elected a director.
All right. Moved by Mr. Mark Martin, seconded by a seconder. Seconded by Mr. James. All those in favor? Any against? No abstentions? I declare that the motion is carried by a majority.
Members online, remember to submit your votes.
Yes. Three B.
2B, that Miss Gloria Declue, retired by rotation, be and is hereby re-elected a director.
Moved by? She's online. She's online, right?
Miss Declue indicated that she was not feeling well this morning, and so she is actually seeking medical attention today. Mr. Bloomfield. Moves.
Yes. Moved by Mr. Bloomfield. May I have a seconder? Seconded by
Mr. Barton.
Mr. Martin again. Mark Martin. Yes. Those in favor of the motion? Those in favor? Those against? Members online, please remember to follow the online voting instructions. Anything? Okay, anything online? Any responses? Okay, so I declare the motion carried by the majority. Number 2C.
2C, that Mr. Vernon James, retired by rotation, be and is hereby re-elected a director.
Moved by Mr. Staple. Seconded
Staples.
by Mr. Williams. Those in favor of the motion, please raise your right hand. All right. Those against the motion? You just monitor the online voters as well. Any abstentions? So I declare again that the motion is carried by a majority. Okay, 3D.
2D, that Mrs. Belinda Williams, retired by rotation, be and is hereby re-elected a director.
So for Ms. Williams, second moved by
Mr. Mark Barton.
Mr. Mark, yeah. Mark. Second. Faith Palmer, yeah.
Faith
Second.
Palmer.
Yeah. Those in favor of the motion, raise your right hand. Yeah. Those against? None. Abstentions? None. I declare the motion is carried by the majority. Then move to resolution 3.
That the auditors Baker Tilly, Strawn Lafayette, trading as Baker Tilly, having indicated their willingness to continue in office, be and are hereby reappointed until the conclusion of the next annual general meeting at a remuneration to be fixed by the directors.
All right. Moved by, can I have a mover? Mr. Parkins, seconded by
Muriel Bailey.
Mrs. Bailey. All right. Those in favor? Show of right hand. Yes. Those against? No. Abstentions? Again, the motion is carried by the majority. Let's move to resolution number 4.
That the directors be and are hereby empowered to fix the remuneration of the executive director.
All right. Need somebody to move for this resolution.
There is a correction. Executive director.
Yeah. Mr. Bloomfield, seconded.
Muriel Bailey.
Mrs. Bailey. Those in favor, show of right hand. Those against? Abstentions? Again, I declare that the motion is carried by the majority. And if I go to resolution number 4B.
That the total director fees for non-executive directors in the sum of 3.785 million in the accounts for the year ended March 31, 2023, be and is hereby approved.
Director, Mr. Martin. Seconded by? Daphne, okay.
Daphne Drisdale.
Drisdale, right. Those in favor of the motion? Those against? Yes, abstentions? Okay, so I declare this resolution 4B be carried by the majority. Colleague directors, that concludes the resolutions. So at this point, at item A on the agenda, which is our adjournment, I just want to say, ladies and gentlemen, fellow shareholders, that this concludes the business of the annual general meeting. And I want to use the opportunity on behalf of us all here to congratulate the board of directors. I want to congratulate the management of the entire team who have shown their commitment to the company by working so strategically in the success of our company during the financial year, April 22 to March 23. Now, Mr. Stapler, just because of you. Yes. Yeah. Yeah. And I'm sure you speak on, Mr. Stapler, I'm sure you speak on behalf of all of the shareholders, all 9,000 shareholders when you say that. I really, really want to appreciate it. And I want to tell you that I personally really regard your presence here, right? Very, very satisfying for us because the questions you ask are in depth, they're studied, and they're very extremely relevant. So thank you so much for coming, and may God continue to bless you, Mr. Stapler. Thank you very much. Yeah. Now, colleagues, I have to say this now at 3:10 p.m. on this day, September 22, 2023, I declare this meeting closed. And thank you for attending and participating in this general meeting of the Board of Directors We, the board of directors, do wish for you every success and hope that you will continue to keep safe and healthy as you embrace the Christmas season, which is ahead of us. Wish you all the very best and all the very best. I'll see you again next year at the same, well, not necessarily the same place, but at the same time. Thank you very much for coming. Yeah. I think we have refreshments. Yeah, we have refreshments. Please feel free.